All right, good evening, ladies and gentlemen. Welcome back to episode 13 of the Australian Gold Weekly Review. It is Friday, October the 24th, and we are shooting this at 4:45 p.m. Sydney time, a relatively early time for myself as well as Mr. Brian for shooting this episode. Thank you so much for all your engagement in our previous episodes, and we're happy to let you know that our previous episode was the first one to reach the milestone of 1,000 views. So thank you so much for all your engagement. Thank you so much for all your support in the comments as well as your feedback as we try to improve the quality of our episodes with each passing week. We would also like to remind you that our videos will now follow a new structure as it has been since the past episode. So there is going to be a section which is available for everyone to watch for free, which is this video that you're watching right now. And there is an extended version of every video that you'll be watching for Gold Hub Australia members. And that process will take only 5 minutes and it's absolutely free of cost. All it requires you to do is go to the Gold Hub Australia website and sign up to become a member, after which you will get exclusive access to insights that we haven't been covering before in our previous episodes. What is Gold Hub Australia's portfolio allocation looking like? What do we think about the outlook for gold, silver, oil, as well as the index in the near term, in the medium term, in the long term? We basically take our analysis to the next level that can really help take your investing journey to the next level. So we urge that you consider to become a member of Gold Hub Australia and watch the extended version of our videos from here on. We'd also like to remind you that none of the content that we discuss in this video qualifies as financial advice, and that you consider seeking a licensed expert if you are on the outlook for financial advice. And that being said, let's get straight into the video. And just before we do that, there's something that I haven't done today, which I do in every episode, is ask Mr. Brian how's things over there. So how are you, Mr. Brian?
Yeah, I'm doing pretty well. Enjoying the nice spring weather over in the Southern Highlands in New South Wales. We had a pretty brutal winter and it's good to be feeling nice and warm. Of course, we had quite a battering from gold, silver and gold stocks this week. But the good thing is I feel pretty happy that we were ahead of the curve when we appeared on Ausbiz and also in last week's video saying that I do expect after the episode finishes, gold and silver goes up. Maybe this time might be a little bit different.
Well, the way I would like to look at it is when we were bullish on gold, gold increased in prices, and when we were bearish on gold, gold decreased in prices. So far, I think our track record has been absolutely clean, because during the episodes where we would shoot and gold prices would go up, we were talking about a bullish environment for gold and how we expect it to go up. So I think things have turned out well for us considering both the scenarios. And yes, gold prices and silver prices have dropped significantly in recent times, which we will get into. But one thing that I've learned across my journey here at Gold Hub Australia is investing in any asset, you shouldn't be expecting it to increase forever. There are going to be times where asset prices decrease, and it is equally important that you prepare yourself for a decrease in prices as you do for their increase. And if we do that, then there's no reason to be upset, panicky, or worried even during downturns in asset prices, because it is about the preparation. And that is exactly what we help you do over here at Gold Hub Australia. So continue watching to have a smooth investment journey. And without any further ado, let's get straight into the video. So gold it's broken all the headlines yet again this week, but for another reason. Gold has seen its biggest one-day low. Gold has seen its biggest two-day low since 2013. So that's a pretty long amount of time. We haven't seen gold decrease so much in such a short span in the last 12 years, which says something about this rally, as it closed at US dollars 4,111 as of now, which is a 3.13% drop compared to last week. Reducing geopolitical tensions, ease of uncertainties around the US government shutdown, and the end of festive season in India, reducing gold demand across Asia contributed to the sell-off, as the dollar also strengthened throughout the week, supported by the weakening of the Japanese yen. Mr. Brian has regularly been engaged with AusBiz, where he talks about at length the journey ahead for gold and silver as precious metals assets. And we recommend that you watch that interview to get a further insight into what the path ahead for gold and silver is. But this is also something that he will be answering here for this video in detail. So Mr. Brian, we were having this conversation before we started recording this video, and according to me, I don't see any near-term catalyst for gold prices to increase or continue their rally, because we are expecting to receive US economic data today despite the government shutdown. We've had top officials from the Republican government stating that the shutdown is due to end as soon as possible. And we've also seen President Trump arrange for negotiations with key competitors to ease the tariff wars. So keeping those things in mind, and coupled with the fact that Japanese currency is depreciating, and so are a basket of other currencies, and the US dollar increasing, I don't really see any near-term catalyst for gold to at least continue its parabolic rally that has been going on for the last 10 weeks. So what is your opinion on that? What do you think of the near term and the medium term for gold?
It's interesting that you mentioned the economic implications and how that could move gold, because I believe that has a more important and longer term impact on the price of gold. A lot of people say that if there are geopolitical tensions, that's going to move the price of gold. That's true, but that only usually lasts for a short time. What matters in the a sustainable impact on gold is the expectation of what would happen to the strength of the US dollar and the general fiat currency or petrodollar system. Now, you're right in that with the expected inflation data coming out and the expectation that the Federal Reserve may not cut interest rates next week, that could potentially be the reason why gold could continue to pull back, on top of what we have seen with the developments in the Russia-Ukraine ceasefire talks, and also the ceasefire talks between Israel and Palestine, both of which seem to be quite, I wouldn't say fully in the bag, but the market is now expecting to see that the conflicts are going to de-escalate to a large extent. As I mentioned in the AusBiz interview, as much as people and the mainstream media, especially those who dislike President Trump, had kept saying that he is a warmongering president, he talks in a provocative manner, but hey, look at exactly what happens in the Trump administration. Contrast that with the Obama administration and the Biden administration, and even the Bush Jr. and the Clinton administration, where America seems to play a part in causing or at least stoking further conflict. And the Trump administration that actually comes in and tries to negotiate, even if he talks tough, and getting countries to stop fighting against each other, or even negotiating peace deals, which in the past were considered to be quite inconceivable, such as the Abrahamic Accords in 2020 and the extension of that in this administration. So the de-escalation of conflicts may have played a part in why gold and silver pulled back, coinciding with the fact that, of course, we have talked about how gold and silver are quite technically overstretched, and therefore a pullback is actually it's a good time for that to happen. Now, should the Federal Reserve indeed follow through and not cut interest rates, then that will probably support my view of gold and silver pulling back further from what they have, extending this correction earlier this week to perhaps to below $4,000 an ounce for gold, and maybe in the low $40 for silver. But I've always, and we'll say it here again, that does not necessarily mean the bull market for precious metals is over. It would be the formation of a healthy base from which the market, once they receive news that the Federal Reserve will have to cut interest rates in the coming meetings after October, that might actually set the pace for gold and silver to continue its rally.
Right, thank you so much for that, Mr. Brian. And talking about silver, silver fell all the way back to US dollars 48 per ounce from a high of nearly 55 US dollars an ounce during the week, which is a 7% fall. Similar expectations as gold for silver, or do you see any other catalysts that could increase or pull back silver's prices further?
Well, I think you may be aware, and you may have read about this, that Indian refineries were unable to access silver for the first time in many years. So the fears of a silver shortage may potentially cause silver to continue rallying after forming a base, after correcting in this round and forming a base. And the reason is silver is not really a monetary metal unless it is in more urgent times. Otherwise, it usually behaves more like an industrial metal. We still have a strong case for silver being quite strong because of industrial demand, either from the requirements in clean energy, as well as also in AI, in the development of AI and data centers, and also all the machinery that is needed. The gold to silver ratio is currently at about 80. It looks a bit healthier. We saw it come down from over 100, which was quite exceptional. It really showed that silver was very undervalued relative to gold, and that might actually be changing. So silver, the gold to silver ratio being about 70 to 85, I think is a more historically sustainable level. So even if gold pulls back a little, I think silver still has grounds for it to remain stronger at this current state.
Right, and I think it's important to view silver as just more than a safe haven asset, because I think gold retains its status as a safe haven asset, and as you said, it'll only be influenced by ongoing geopolitical tensions or macroeconomic news that indicates conflict for so long. And the main catalyst for that would be the strengthening or the weakening of the US dollar. But for silver, it's not just that, because there's a lot of industrial use cases for silver that align with where the world is headed as a part of the clean energy transition, as well as the rise of AI. Which could also influence silver prices, and not just macroeconomic uncertainties. So it's important to look at silver from that context. And moving on now, the ASX All Ordinaries Gold Index, in the words of Mr. Brian, has taken the escalator and fallen off a cliff. So we've seen dramatic increases in the ASX All Ordinaries Gold Index in the past few weeks. We've seen 500 points in increases, we've seen 1,000 points in increases, and we've even seen 1,500 points in increases. And I did mention last episode that we're not going to see an increase as big as this, but I did not say that we're not going to see anything of this magnitude happen. And that is exactly what has happened. We've seen a 1,900 point decrease this week in the ASX All Ordinaries Gold Index, as it fell to 15,956 points after being down nearly 2,000 points midweek. And Mr. Brian still believes that there is potential for a further pullback in gold producers. At Wednesday, we saw most of the gold producers that you can think of down 8 to 10%. You can think of any gold stock in your head right now, and they would have been down 8 to 10% on Wednesday. And yet, Mr. Brian thinks that there is a possibility for a further 5 to 10% pullback in these stocks for them to trade at a fair value. So, can you explain that to our viewers, Mr. Brian?
Okay, so if you look at the 1st of August, that was actually where gold stocks had their recent lows at about, I think, just under 11,000 points. And then it staged a phenomenal rally of about 70% in the space of about 9 or 10 weeks to last week's peak of, I think it was 17,900 points, something around that level. And what happened was, I had said that it was looking a bit overstretched. And should gold pull back like it did, then gold stocks were going to fall back significantly. And this is also what happened. Now, even though the ASX Gold Index fell almost 2,000 points during this time, and that's a pretty significant move, mind you, it is still about 50% higher than its August 1 levels. So in a technical setup, when you have a correction, now some people say that it has to retrace probably to like what they say, a 61.8% retracement based on certain rules. We are currently, the retracement is about, so we went up about 7,500 points and we came back down 2,000. So that's a less than 20% retracement. So there could still be a way to go if this is actually a correction. So that's from a technical perspective. From a fundamental perspective, we saw that gold also ran up significantly. Gold stocks ran up by more than that. The gold to oil ratio is at 70 to 75. Historically, it's supposed to be at about 20 to 25. I'm willing to say that in this new era of a new normal, because we are in the midst of a decrease in confidence in the fiat currency system, the gold to oil ratio could possibly trade about 40. And if that is the fair value range for the gold to oil ratio for gold stocks, then that would also justify gold stocks pulling back further to reflect that level. Currently, gold's very strong. It's possible that it doesn't have to retrace back to 40, a gold to oil ratio of 40, but even pulling back to 60 is not beyond, it's not far-fetched. So that's why in all this, I do think it is reasonable for gold stocks to pull back another 10-15%, the gold stock index, and some of these gold stocks to also retreat about 15 to 20% to return to more normal values. What would drive that would, of course, be if I am right that gold continues to pull back, and as you point out, supported by a combination of overstretched technicals and also the realization that the Federal Reserve may not be cutting interest rates in October, plus also reduced geopolitical tensions taking the war premium off gold.
Right. As far as the Fed is concerned, we just had news come out from Reuters 1 hour ago stating that the release of key economic data today on Friday, despite the US government shutdown, is unlikely to sway the Fed from cutting rates in October. So as far as the rate cut expectations are concerned, I still believe that the Fed will cut rates by 25 basis points this month. But I don't think that we will quite see the reaction that we did when the Fed cut rates in September. Because gold did go on quite a rally after the Fed cut rates in the September 16-17 meeting. but I don't think we can expect to see a similar reaction with the Fed cutting rates this month, if they do. And that's just my opinion, that I don't think the Fed will sway from cutting rates this month, because they've been clear that they need to strike a balance between jobless claims and inflation data. So I think to combat with that, they will continue to cut rates. But if we continue to see a rally in gold, if Fed cuts rates, I think gold will further go into the overbought region. But that's just my opinion. Thank you so much, everyone, for watching. And we will now be moving on to content for the members section. And we'd like to remind you that if you want to continue watching, we urge you to go to the Gold Hub Australia website and sign up as a member. It takes only 5 minutes and is absolutely free of cost. We hope you had a meaningful insight into the near-term and medium-term outlook for gold, silver, as well as the ASX All Ordinaries Gold Index, and that it has added a meaningful benefit to your precious metals and mining investment journey. So thank you so much, everyone, for watching.